We start here with the latest from the NSE, and after closing the week on a low note, the NSE 20-share index started the week on yet another low down, 15.66 points to close at 2,955.44 points. The Nairobi Securities Exchange 20-share index fell below the 3,000 mark for the first time in 8 years, indicating depressed economic activity coupled with the looming election and slow economic performance at the start of the year.
The Bulls, which Monday edged down 15.66 points to stand at 2,955.44, flirted with levels such as this was in 2009, precisely October 14th, when the NSE 20-share index stood at 2,969.15 points. The fall of the index could be an indicator of the negative investor sentiment, outlook and confidence in the performance of the Kenyan economy going forward. For listed companies, the market continues to remain choppy as investors become edgy with political temperatures rising. Despite a gain in all-share index and 25-share index to start the week, investor analysts attribute the sharp fall in the NSE 20-share index to reduced foreign investor participation in the market and local institutional investors preferring treasury bonds as opposed to equities investments. As a barometer of the rest of the economy, a depressed market reflects economic performance of the last 2 years as some listed companies issued profit warnings, downsized their staff while others sold off and exited the Kenyan market. The market is reported to have lost 47% of its value over the last 2 years. While 2009's fall in share index was indicative of a tough time for Kenya with severe drought and hyperinflation, some think today's market performance is a replica of 2009 and is likely to persist. In 2016, the stock exchange dealt a blow to investors as it shed 120 billion shillings from their wealth. 2017 being an election year, investors are taking very conservative positions by adopting a wait-and-see attitude, while others are taking the tactical cat-and-go approach by choosing to cut their losses and run. Analysts, however, argue that the current market valuation provides an attractive entry point for long-term investors. Joy Doreen Bira, KTN News.